And moving on to the UK oil, we saw on the UK oil that prices continue to respect that bearish bias we anticipated on, was it on Tuesday? Yes, and we saw that move, we saw the signal, we saw the confirmation, and price moved to the downside, and then price came back into this area where I'd made mention of an opportunity at this point, a bearish opportunity at this point for those who are already in the trade. And if we look closely into what happened on lower time frame, that is on the 15 minutes time frame, during the course of yesterday, we identified this channel, and I suggested that we should be expecting a breakdown of the channel and a retest into structure, the signals that confirmed a trend continuation to the downside. So we saw the breakdown. That was a signal that we are still going to go bearish, and then we saw price went back as far as $119 before we started seeing bearish momentum that pushed price further down. So if you had followed this idea accordingly, you will definitely be having two positions running on this trade. And what we have right now is that prices moved significantly well in about, let's check that out, with about over 500 pips running. That's the first position we took on Tuesday, and the second position is running around over 350 pips. So making a total of 800, over close to 900 pips on the UK oil. So our take profit target still remains at 1112. However, if we look at what has been happening in the last 9 hours, we will notice that price has rejected the $113 area. So from a technical perspective, we will be seeing this area as a potential demand zone that could probably push price further up. And coming from the fundamentals, if you're following the news, we have come to observe that it appears that the US UK oil, the oil prices might continue to go higher, considering the fact that the OPEC are insisting that they will not increase production. As you all know that the increase in price of the oil commodity also favors the Emirates as well. So I'm of the opinion that we might be that the bearish momentum we've seen in the last couple of days could probably be a retracement of that impulse leg, of that bullish momentum we've identified earlier, sometimes 2 weeks earlier in the month, I guess. So if we go up to the daily time frame, sorry, to the 4 hours time frame, we would want to look at how structure has been playing out so far and what our expectations will be on the UK oil going forward. So if you allow me, let's have a clear chart on this one, and let's see how price is playing at the moment. Then we can now determine what we will do going into the New York session. So for those who took advantage of the selling opportunity we identified here yesterday, I will suggest that you move your stop loss accordingly to probably take some profits, and or probably leave the trade outrightly, because if you are taking two position already, you are close to around 900 pips in profit on this pair, which is, I think, a good a good um, a good portfolio for the week. So now let's see what is happening on a higher time frame, and let's make a decision in that regard. So on the higher time frames, we still have our supply zone identified at around $116, and we can see that price has continued to respect that area since sometime in April. Price rejected, then we had one in May, and we had another rejection mid-May before we saw that significant breakout of that supply zone, giving us an impression that we might be going further high going into the new week or the new month. Now, price appears to have done a retracement right back into that first temporary bullish trend line we identified here, the dotted black line you can see on your screen. And then there is a possibility that price could go further down to retest the major bearish trend line we identified here on the daily time frame, after which we will be looking for potentials for bullish momentum going forward. So with the information we have here on the daily time frame, we want to scale down to, let's say, the 4 hours time frame to see if there are expectations we have here going into the New York session. So if we look at structures going left and look at what has been happening since the 20th of May, I guess, we will notice that there seems to be a demand structure around $112 area, where price has rejected in the past the multiple times. If you can see with the visual representation of my arrow, you can see that price have been respecting that trend line, and even in fact that demand zone was very responsible for that upsurge in price that took price to around $124 before we saw that retracement move. Now, at this point, we want to be waiting for the culmination of this retracement move. And where will this retracement culminate? When will it end? We don't know. But the only clue we can actually use to guide our action is that we will be waiting for the retracement to probably end at around our golden zone area, which is, as you all know, is between 50 and 78.6% retracement of the previous impulse leg. And if we look at what structure have here on the 4 hours time frame, we have our impulse leg around this area. We have that impulse leg here before we saw that retracement phase. Then to be more specific, we bring out our retracement tool and run it through that impulse leg to identify where our 50 and 78.6% retracement shall be. So if we do that, what we're going to be finding is around this area, around between $114, $115 and $110 will be an area we could be looking forward to buying opportunities going into the New York session. So allow me to give this a yellow so that I always like my buy opportunity zone to be a little bit light so that we can have so this is what our expectations will be going into the New York session, and I'm not sure if this formation will happen during today's New York session, or probably it's going to happen tomorrow. However, I want to explain to us what we should be our expectation going forward. From this juncture in the market, we've seen that price have done a retracement into this area, and like I said, we are still waiting to see how, if the retracement phase has ended or not. So to confirm that the retracement has ended, we need to see price do a reversal pattern in the form of probably a double bottom structure within this zone area, an inverse head and shoulder, 1 2 3 reversal pattern, or a rising wedge, whatever reversal pattern that comes to mind or that surfaces. Then we want to be looking for a breakout of that structure within this area for a signal, then a confirmation at a retest of structure to join the potential rally going forward. So what we want to be looking out for at this area is a structure that looks more like this. We want to look for reversal patterns within this area, a breakout of structure, and then a retest into structure to confirm the trend continuation to the upside. And with this information being said, it is very likely that this will take multiple hours. We might be talking about at least a minimum of 4 hours thereabout. That's just a suggestion. We never can tell how price is going to play out in the next couple of hours. But roughly, from my own experience, it could take probably around between 4 and 8 hours minimum to actually do that formation right here on the 4 hours time frame. So that is what I'm expecting going the new into the new month, a New York session. Okay, hi Max, good morning to you. Roy Sharma says he's from India. Namaste. um Abujek, shalom, peace to you too as well. Ting, hi, how are you today? Dre, hi. Oh, that name looks familiar. Lua Femi. My Nigerian guy. Good to have you around from Nigeria. Good morning to everybody. Oh, Papa, good morning. Oluwafemi, oil, please. Of course, we are dealing with oil at the moment. I think you're talking about US oil, I guess. We are going to dive into US oil as soon as we finish our speculation here on UK oil. I Namaskar. Okay. Good morning. Kotiana, hello, good morning to you. I'm glad to have you around. Oh, I see. Oluwafemi, glad to know. How is Valencia today? And how's the weather like? I'm pleased to have you around. Okay, so I think we need to move on from here. I don't know if you have any questions in this, based on what I just discussed so far. Do you have any questions? Do you have any additions you might want to put into this? Speedy, good morning. Oluwafemi, yeah, I miss my country for real. Oh, sure, I understand. Sure, I understand. Okay, from Nepal, from Nepal, namaste. Okay, so let's continue with what we have here on the chart. Same here, Oluwafemi. I'm glad to have you around too. Mammoth, good morning. Hi, how are you? Kifa Peps, hello to you too. Good morning. So, moving on, we go to the 1 hour time frame on this one, and let's see how price has been playing out so far in the last 10 hours. Like I said earlier, price appears to be doing what looks more like a double bottom structure at this point. Well, we don't know if this double bottom structure will actually hold, but if it does, then we want to be looking forward to a breakout of structure. Let me make this more clear. So, like I said, remember we identified this buy opportunity zone around this area between 110 and $115. And we have a structure that looks more like a double bottom structure right within between 50 and 618 retracement of the impulse leg we identified on the daily time frame. So if we have a breakdown of this area at 113, we have a breakdown of this area, then we want to hold on a little further to see how a reversal pattern will form within this buy opportunity zone, after which we take advantage of that bullish momentum. However, if price does not go that far, that is, price does not break down 112 $112.80 area, then we want to have this as a double bottom structure. And if you the last time I checked, the double bottom structure is a very strong reversal pattern we can actually use to take advantage of any bullish momentum coming up. So if we bring out our line chart at this point and want to identify a neckline around this area, we will have something like this. We'll have something that looks more like this. And let's give this a purple, I guess. Okay, great. Oh, sorry. So we will be having a neckline right at 114. Allow me to label this for the sake of clarity. Neckline at $114.75. So let's place that right at the top. Make this purple. Okay, good. So we have a neckline around here. So what I'm saying here is this: if price does not break down this, if price does not break down this area, we want to see a spike that breaks above that neckline, which will give us a signal. Then we want to be looking forward for confirmation in the form of a retest of structure, after which we look for patterns on lower time frame that supports a trend continuation. Then we can join the potential rally to the upside. So what this simply means is that if price does break above $114.75, then we want to be looking for entry point right above this area, that is after confirmation has been met. So then we will definitely be having a scenario that looks more like this. We have our entry point around here. Please mind you, after confirmation has been met. So we will be looking for a stop loss around this area for the meantime. Then a take profit target at sincerely, we already meet 120 already, and for the meantime I would suggest that we still go for 120 at the moment. But on a long-term perspective, which I'm not sure price will go thus far, is to extend the previous impulse leg. And if we want to do that, if we go to the daily time frame and look at that impulse leg, this is the impulse leg we're talking about here on the daily time frame. We have the impulse leg here, and if we want to extend the impulse leg, we run our Fibonacci extension tool right along the leg. Then we will have something that looks more like this, with a aim at 127.2% extension of the impulse leg. So on a long-term perspective, we are looking at around $130 as a take profit target. That's on a long-term perspective. Give me a moment. Let me give this. So we have potential TP target. So we are not yet sure if price will go that far, but as we follow price, if price continue to move further, we'll continue to follow it. And if structure supports further momentum to the upside, then we'll continue to add more position as we guide price to that TP target at around 130 area. But for the meantime, like I said, let's aim at $120 at least for now. Price has gone to $120 before, and if we look left, we can see that we have structures that have supported selling opportunities at this area in the past. If you look left, you can see this. We can see price has been rejected at this area at one point in time. You can see we had a rejection of this area, we had a rejection of this area, and we had a rejection at this area. So more reason why I said we should hold on $120 as our TP target for now. And if we do have a breakout of that area, then a retest into structure could welcome further position in this trade. So this is my expectation on the UK oil in general. And if I do a quick recap on that, I said if price breaks down that area at 112.8, then we want to hold on to see how to look out for a reversal pattern within this buy opportunity zone to take advantage of that bullish momentum. However, if we do have a breakout of neckline, then we want to be taking advantage of a trade right above the neckline, that is after a retest of structure has happened. So on this note, we close for the UK oil. One more time, I'm going to ask if we do have questions or clarifications. I live in Fogo Island, the volcanic island. Okay, Volcano Island. Sincerely, I don't, that's my first time hearing of that location, but you're welcome here. All right, Oluwafemi, I heard you. That is noted. Okay. Okay, Oluwafemi, that's noted. So moving on,